All right, I'm recording now. It is February 20th, 2024, and I am just starting today's review session, and I'm looking at the calendar, and we've got Zoom here. I moved the upload financial statements to Thursday. I realized that was a tight deadline because you wouldn't have met to do your contract, so I want to go over the project. And then your chapter 5 homework part 1 is due Wednesday night. And chapter 5 part 2 homework, which is going to be appendix 5A, is due Sunday night. And then we're rolling into a test week. So we've got chapter 5 quiz a week from yesterday on next Monday, all the account ID that we do before the exam. And then we're also doing the practice problems as well. And then you guys will be coming to campus at 2:30 a week from tomorrow to take your second midterm. Okay. Any questions on the calendar for you guys? All good. Okay. So let's talk about the project part 2. Let's talk about the project part 1 first. So let's I have read all your PowerPoints and all your speaking notes and all your bibliographies over the weekend, and I have listened to all your videos. So that was kind of fun. Now your job is to do the critique. So let's look at that. Oops, wrong one. Sorry, guys. Can you see Canvas, Austin, Ashley?
Yeah.
Okay, perfect.
Yeah,
Okay.
I can see it.
Good. Well, how do you know if you can't see something? Never mind. All right. So what's left on project 1 is just for you guys to do the critique. Has anybody looked at that yet? Okay. So here's your team that you're assigned. So if you're on team 1, you'll critique team 6. If you're on team 2, you'll critique team 1. So only critique the team that you're assigned to. And you're going to critique the video, PowerPoint, and the speaking notes on the PowerPoint. Okay, and it's set up as a quiz, but it's really just a survey. Okay, so you want to go to Files, Class Presentation. So you're going to come over here to Files. Let's just do it like this. Okay, so you're going to come over here to Files. And can you see that class presentations for critiques? And all the PowerPoints are here. And no one attached an additional document for their speaking notes. Their speaking notes are inside PowerPoint. So they're all in one place, which is just great. So if you're doing Team 6, you will download this document. And you'll see, let's just show it. You'll see on page 1 of the document, there will be a YouTube link so you can watch the video and click through the slides. Don't read the slides online because you won't see the speaking notes. You're going to need to download them. So let's go look at the download for that. Let me pull that up. So you want to make sure to look at their speaking notes. And what I did when I graded these over the weekend, and I haven't finalized grading them, but I did a preliminary read. What I did was I brought the PowerPoint up so I could see the speaking notes, and I listened to the video at the same time and kind of looked at both of these. So, all right. And then where did it go? It doesn't want to talk to me today. It's being stubborn. Come on. Let's see. Let us see, where did it go? Why is it not coming up? My computer's not recognizing my USB today because it's being stubborn. Let's see. Well, I guess I can't show you, but you're going to have to look at it on your own and see the speaking notes. But you all did speaking notes. So, all right. So let's go back. Does it show part 1-5. So you're going to the files, downloading the PowerPoint, watching the video, and then these are the questions below. Did they cover the required material in a way that made sense? And don't just say yes or no. Add some detail. The PowerPoint and notes include a discussion. And then this is kind of the most important part. So put a lot of thought into this. What did you like? Name 3 strengths. And you want to try and identify the strengths in the presentation and name 1 thing they could improve. Okay. And it's just a 5-pointer, and then they'll come in. If you look at the questions, will just come in, and you can take this as many times as you need to. So the first question is, what company are you critiquing? So you'll click on that. And then here's your questions right here. And then question 2. And that's it. You submit your quiz. Okay. All right. So let's go back to the project. So now we're starting the second project. So the first project was only looking at business model, non-financial business model project. Okay. Now we're doing the financial statement analysis paper. And the turnaround time on this is pretty tight, but it's going to go pretty fast. So as a team, you're going to pull financial statements. Okay, and here's the full project instructions. Okay, and you've already been out to the SEC website because you went there to get the 10K, to get the business model analysis. So you're going to go similar place, but slightly different. You're going to be able to actually go into the SEC and do an interactive data, access the data interactively, and just pick the income statement and the balance sheets. And you're going to need 4 statements. Okay. So be sure to read the instructions. You need 4 statements per company for a total of 8 statements. Okay. So you need income statement, balance sheet from the most recent year, the balance sheet from 1 year back, and the balance sheet from 2 years back for each company. And you're going to need that to calculate some ratios. All right. So let's look at the full instructions for this project. So get your statements, that's worth 5 points. Make a contract, that's worth 5 points. And then write a very short paper. It'll be 50. And then you will do, after project 1 and project 2 are completed, you'll do a reflection, a short reflection. Okay. So those are those 4 statements. Step 2, make a project plan. So this is a little shorter than the business model analysis. So you're going to make a title page and list the company backgrounds. You're going to do a 3-year horizontal trend analysis on the income statement and balance sheet. Then you're going to write about the income statement trends, write about the balance sheet trends, and pick which company is best. Okay. There's no video involved. It's just a paper. Okay. So here we go. Title page, introduce both companies. And then you're going to fill out the 4 spreadsheets below. That's what part 3 is. And you guys should already know now how to calculate net change. This year minus last year divided by last year times 100 equals your percent change. All right. So for company 1, you're going to fill out net sales, cost of goods sold, gross profit, net income, and then you're going to calculate some ratios. Okay. And then you're going to look at the balance sheet, and you're going to do current assets, inventory, total assets, current liabilities, equity, total liabilities and equity, and you're going to calculate some ratios. Okay. Where it's blocked out here, it means you don't have to calculate net change. Okay. All right. And then the same for the other company, income statement, trend analysis, balance sheet trend analysis. All I can tell you on those statements is double check, triple check your work, because it's easy to make an error. And then you're just writing briefly about the income statement and balance sheet for each company. Always start with sales. If sales are going up, you would expect cost of goods sold to go up also. then talk about net income and gross profit trends, and finally discuss the ratios, and then make a conclusion. Okay. When you get to the balance sheet, always start with total assets, then current. Is the trend favorable, unfavorable, or neutral? Discuss liability trends, and then discuss the ratio trends. And bring it all together. How's the company doing overall? And then which company is best and why? All right. Upload to Canvas paper and the statements that you attached below. All your statements for each company. All right. And then here's some tips on writing. All right. So any questions on that? All right. So I would say you only need one set of statements. You don't, all team members don't have to get the statements, but they should be shared with the full team. Okay. All right. Okay. So let's look at the calendar. So the statements and the contract are due Thursday. And then the paper is due. You've got a little bit of time on the paper. Where is it due? Somewhere in here. It's due March 3rd. So you got about 2 weeks. Okay. All right. And then we go into the final stretch at the class. All right. Okay, so any questions, or what particular questions do you guys have about this chapter?
You go over
Go ahead, sorry.
working on the homework again on question 2. I'm just stuck on the last one where it says when the company received the balance due.
Yeah,
Could you guys go over the journal entry for that?
so with this chapter, you want to be real clear on when you start a homework problem or a test problem. The first question you have to ask is this a perpetual system or is this a periodic system? So the perpetual system is in the main part of chapter 5, and the periodic system. Can you see my agenda?
Yeah.
Okay. The periodic system is in the appendix at the back of chapter 5, and it's only like 3 pages long. Okay. So first off, do you guys have any, you want to know about just chapter 5, right? You don't have any questions on chapter 4, is that correct?
No.
That's not correct, or it is correct?
Sorry, yes, that is correct. I don't have any questions on chapter 4.
That's fine. Yeah. All right. And next week we'll do test review at 3. Okay. So, and then the other big piece of chapter 5 is we're doing the multi-step income statement for perpetual. And then we're learning how to calculate cost of goods sold for periodic. So I'm going to say 5A. And those are like the big statement pieces for this chapter. All right. Okay, so let's look at my favorite slide of all time, which is a side-by-side comparison of these two. Can you see PowerPoint or no?
No.
All right.
No.
Okay.
No.
Hang on. New share. All right. Now have you guys even read Appendix 5A yet?
No, not yet.
Okay. So let's ignore periodic. Hold on. I'm just going to grab my textbook. Let's ignore periodic for right now. And so you will learn about this in the appendix, but we're going to stay on the left column here and talk about perpetual. Okay, so this is the test where you have so many journal entries, and you really need to start. It's like the vocabulary. First you learn 10 words, now you've got to learn 50. And so you really have to drill on this. And I always tell students, make flashcards, do Quizlet, whatever it takes. but you want to be able to do journal entries with more fluidity, more confidence than before. Okay. So what happens in chapter 5 is we start selling product. Chapter 1, 2, 3, 4 was all service-based. And so because of that, we just said, oh, we did some service. We repaired something. We cleaned something. We provided consulting services, debit accounts receivable, credit service revenue. But now we're selling tangible physical product, which means we bought inventory at, in this case, $1,400, okay? And then down here, let's see, where do we show it? Oh, I know why I can't do that. We bought inventory for $1,050 and we sold it for $1,400. Of course, you buy inventory at one price and you sell it at a higher price, right? So now a simple sales transaction, I was showing you the purchasing ones first. A simple sales transaction used to be 2 lines, debit accounts receivable, credit service revenue. Now we use a new account, sales, okay? So there it is. But if you're selling inventory in a perpetual system, you have to debit cost of goods sold to recognize that you're now expensing the inventory, and crediting inventory, which means you're eliminating that inventory. You're reducing the inventory. You've sold it. Okay, so that's journal entry number 1. You need your selling price and your cost of goods sold. Your homework problems will probably give you cost of goods sold. Let's just double check that. And let me bring up your homework here real quick. And you're on the last homework, Ashley, number 12. I'm number 14.
I just started. I'm on number 2.
Okay, no worries. I'm just getting my bearings. So if just a sec. So looking, I'm just going to take a quick look. Brief exercise 3. Yeah, they start out, problem 1, they give you cost of goods sold. Problem 2, they give you cost of goods sold. So you know the selling price and you know cost of goods sold. Okay. And the first couple of transactions, they're all, the first couple of transactions, they are buying and selling. The second transaction, they have selling in the first A, and then they have a purchasing transaction and so forth. So you have to know both sides of these pretty well. Okay, so let's do the selling ones first. They give you the selling price, they give you cost of goods sold, or they could say to you, cost of goods sold is 70% of sales or 60% of sales, and you just have to calculate it. Okay. All right, so then they tell you, in my example, in my PowerPoint, we say, oh, we made a return. So it's sales returns and allowances, debit. What kind of an account is that? That's a contra account. It's a contra revenue account. And it effectively reduces sales. You sold 1,400, but then you returned 130. So you actually had less sales. Accounts receivable, we use the same account. We credit it because they owed us 1,400, but now they've made a return, so they owe us 130 less. And then we have to put the inventory back into inventory, but we have to increase the inventory, debit inventory, and credit accounts, credit cost of goods sold. Okay, so these 3 accounts, accounts receivable, inventory, and cost of goods sold, we're just doing the opposite when we have a return. But for sales, we don't debit sales. We debit sales returns and allowances. And then finally, this is the entry you're asking about. Finally, it's the payment. Is that correct, Ashley?
Yeah, I think so.
Okay. So yeah, receive the balance due. Okay. So how much did the customer owe us? Well, let's look. We had a debit of 1,400. We had a credit of 130. That's 1,270 that the customer owes us. So we're going to credit that part of it. That's what they owe us. But look at these debits, they're not 1270. And so what happened was, in this case, the customer was eligible for a 2% discount. Okay, so let's go back and look at that problem just real quick here. Let's go back and look at it. You want periodic. No, no, no. All right, can you see this journal entry here? Cash sales discount and so forth. So how did we calculate this 25? We said, oops, the customer owes us 1270. If, oops, oh, sorry. Okay, I shut the whole thing down on you guys. Hang on just a sec. Let me pull up the invoice real quick. Okay, so in my example problem, they have to tell you, in the short of it is this eligible for a discount? Okay. Okay, so this was the sale of 1400, the original sale. And this is what the problem has to tell you. Are there payment terms? And I'm looking at the homework problem, and it says, also in the homework problem, it says the terms are 210 net 30. So how do we calculate that? We say, this is the invoice date of 2/4. So if the customer pays in 10 days, they can deduct 2% off their bill. Okay. Okay, well, that's pretty clear. So let's go back to those sales journal entries. So what happened here? We made the sale. Customer returned $130 worth. And now the customer is paying. So we credit accounts receivable. The customer no longer owes the money, and we take 2% of the net amount. We don't take 2% of $1,400 because the customer had returned some of the inventory. So 2% of 1270 is $25. So they only actually had to pay us $1245. So we debit cash for $1245, which is 98%. We debit sales discounts for the 2% discount. And sales discounts and sales returns and allowances, they both have a normal debit balance. They are both contra revenue accounts. So you have sales minus sales returns and allowances minus sales discounts equals net sales. Okay. Does that make more sense?
Yeah, a little bit.
Yes.
So you want to keep track of, and they're doing the same setup here, Ashley, on this homework problem. They're saying they sold the inventory, the customer made a return, and now you want to pay the net amount. And you want to apply, and you have to look at the dates. So on here, the customer paid on 2/14. So if on the homework problem, the sale was made on March 2nd, at least the one in my book is, and the customer paid on March 12th. So they are eligible for that cash discount, and they're going to take it. Okay. And that'll be 2% of the balance. So you had a original amount, and again, I don't know what's on Wiley Plus, but in my book it says $800,000. Then they returned $140,000. So that would be 660. So you take 2% of 660,000. Okay. All right. So those are the sales transactions. Okay. So let's go back to that side.
The discounts just apply for turns, or the discounts apply, what else do the discounts apply for?
Say that again. Do the discounts
The
apply?
discounts, they just apply to returns? Like, when else do you use the discount?
So, oh, it's so confusing. I know. So it's all the discount is in this. There's two types of discounts. There's a purchase discount and there's a sales discount. Okay. So this sales discount is when the customer pays early. And it's a sales discount that reduces the cost of the inventory. And so we say to the customer, if you pay us early, you get 2% off of your selling price. So it's not a discount like you and me going to the store and saying, oh, it's 20% off today. It's not that kind of a discount. It's a discount for prompt payment.
Okay. And then
So you say
the
you pick the full sales amount, then you subtract the sales return and allowances, and that leaves you with 1270, and you apply the 2% times 1270 to get the $25 discount.
okay. I think that
Now,
makes sense.
if you did not have enough cash on February 14th, but you knew you were going to get more cash by the end of the month, if you paid this bill on March 4th or March 3rd, you wouldn't have the discount. You'd just be debit cash 1270. I'm sorry, if the customer paid you, if the customer didn't have enough cash, but they did have it by 30 days, they wouldn't be eligible to take the discount. So the company would record the full collection, 1270, debit cash 1270, credit accounts receivable 1270. Okay.
Okay.
So, and then these you'll
Then
learn when you get to Appendix 5A, okay? What else?
okay. So then it's used for the returns because they already used that they already paid with the discount, so they get the discount money back.
Say it again. I'm interested in your line of thinking, so
How does the discount apply to the returns then? Because it's not payment, they're getting paid money back, right?
so let's say you bought something for $1,400, okay? And you bought it from me. So I record Ashley owes me $1,400. And then you got it and you said, I'm going to return part of it. So you returned $130 worth. Okay. So now you owe me $1,270. Okay. So yes, I'm going to give you a discount if you pay in 10 days. It's just a prompt payment discount. And so you apply that to the 1270. So at the end, if that were my only sales, I don't know if you can see this, but can you see the board or is it too small? Let's stop sharing for a minute to do that. Okay, let's see. So if that were my only sale, I'd have sales of 1,400, sales, returns, and allowances of 130, and sales discounts of 25. And net sales would be, I'd have to do it 155, 1245. That sounds right. Yeah. Net sales for me would be 1245. Okay. So I don't get to take 2% on the 130 because I gave it back. Or you don't get to get the discount. You can only apply that 25 to what you owe. Okay. Okay. And we want to, a lot of companies, like a Target or something, they want to know what stores have a lot of returns. So you've got a Target, and then you've got the Northgate store, and you've got the Factoria store, and the South Center store, and the Seattle store. Does one store get more returns? Does one type of product get more returns? So returns are really interesting to companies, and they can, help them make decisions. Okay, so let's take a quick look at purchases. All right. For perpetual, purchases are pretty straightforward. And again, we're just working with this left column, okay? So now you're the customer and you're booking the entries. Okay, so the customer says debit inventory, credit accounts payable, and nobody's going to pay cash for inventory, by the way. And then we have a new entry depending on who pays the freight bill. So if the buyer pays the freight bill, it's going to be charged to inventory, debit inventory and credit cash. If the seller pays the freight bill, it's going to be charged to freight out and cash. Now here's that return from the customer's point of view, okay? So it's accounts payable, debit, inventory, credit. So it's just a reversal of entry number one, okay? And then finally, payment on account, the customer owes $12.70, but they got that $25 discount. So they're only going to be paying $12.45, and that $25 discount goes against inventory. So what are we saying? We're saying the cost of this inventory is $1,400 debit, $1,400 debit for freight, because that increased the cost of the inventory. And then we reduce the cost of the inventory by the return, and we reduce the cost of the inventory by the sales discount. Okay. So but you can see all we're using throughout this is inventory, accounts payable, and cash. Okay, so now let's go back to the actual journal entries there. And kind of walk through them. So purchases start with an invoice. We talked about the invoice. It's telling you what we bought here with some calculators. Bought the inventory, debit inventory, and you don't need the word merchandise there, but that's what the book calls it. Everybody else just calls it inventory. And credit accounts payable. And then this thing about freight is it depends on the payment terms. So let's go back to the invoice. The payment terms are here, but also part of the payment terms are who is paying the freight. And it says freight shipping point. Okay, so what does that mean? If freight is shipping point, that means the buyer owns it at the shipping point, so the buyer pays the freight. If it's freight until the destination, that means the seller pays the freight because the seller owns it until it gets to the destination. And all that, any of that means is who pays the freight, okay? Ultimately, whatever it all gets sorted out in the cost. But typically we see FOB shipping point, but sometimes we see destination, okay? So we know, so we go to the freight bill and we say, since the terms were, if the terms were FOB destination, it would be freight out in cash, but typically it's FOB shipping point. So it's only going to be inventory and cash paid by the buyer. If it's FOB destination, the seller would book this entry. Okay. This entry is not made by Jennifer, but by the calculator store. Okay. So then the purchase returns and allowances. So I don't know if you've ever been to a store and you're looking at the floor model of something and then you say, I'll take one. And they say, well, actually, that's the last one we have. And sometimes they'll give you a discount of $10 or something because you're buying the floor model. That's an example of an allowance. An actual return is where you physically return the goods. Okay. In this case, Jennifer returned two calculators, debit accounts payable, credit cash. So she doesn't owe for $130 because she's returned it. All right. And then finally paying the bill, 210 net 30, 2% cash discount if the payment is made within 10 days. That's what that 10 is. Otherwise, the full amount is due in 30. All right. And there's lots of different payment terms. 110 would mean you get a 1% discount if you paid within the first 10 days of the next month. You will not see that one. It shows up in retail all the time, but this is more common. 210 net 30, 110 net 30. Okay, so this is what I wanted to show you. So the buyer has this accounts payable and they book that first journal entry when they bought the inventory for credit $1,400, debit inventory. And then when they made the return, they debited accounts payable and credited inventory. So the balance in accounts payable is $1,270. And that's what they calculate that discount on. Don't put pennies in journal entries on exams, please. And so here you see that. Okay. So the most important thing you do for homework is make sure you're clear in your head who is the customer, who is the buyer, who is the seller. Okay. Because you're doing both sets of books. So like for the first problem, it says journalize the transactions on the books of both companies. So you have a purchasing transaction for the buyer and you have a sales transaction for the seller. Okay. All right. If Jennifer paid without taking the discount, she waited the full month, it would be debit accounts payable, credit cash. Okay. And then here's the question, how much did that inventory really cost Jennifer's office supply? So remember that's one account in perpetual. We debited inventory for the invoice of $1,400. We debited inventory for freight because it was FOB shipping point. We credited inventory for the return. We credited inventory for the sales discount, for the purchase discount. And the net cost of that inventory was $1,385. So the rule is what goes into inventory is all the costs that it takes to get that inventory ready to be sold. So obviously the invoice, obviously the freight to get it to the company, and then of course less the return and less this purchase discount. Okay. And then we did the sales side. I already went through these. So that $1,400 was sold, but their cost was lower because they bought it to resale as well. There's the return and 4-line entry. And then finally recording the collection. All right. So there's one more thing that you guys should know about in this chapter, and that is you're going to learn the Appendix 5A, but the other piece is the multi-step income statement. And so I like it. I like starting with it. See if I can get the whole thing here. Yeah, let me show you this. So this is a very busy thing, but it makes sense. So this is the multi-step income statement. And like I was saying, that wasn't the $1,400 wasn't all the sales for this company. So if sales were 250,000, and you can put this all in one column, that's fine. You don't have to have a separate column here, but sales return and allowances, 8,000 and 5,000 for a total of 13. And then remember, we subtract them, we don't add them. So net sales. So everywhere you see pink is a calculation. The rest are just coming off the accounts. So you'll get a list of accounts with their balances, and you need to be able to make one of these. And there's one in the practice exam. Here's cost of goods sold, ending balance in that T account, and gross margin. You subtract it from net sales. So 237,000 minus 142.2 is 94,800. And then here's all the operating expenses. Now, you need to know the difference between operating expenses and other revenue and expenses. So salaries, utilities, advertising, depreciation, freight out, insurance, those are all the normal costs that support creating those sales of 250,000. Okay. What is not operating expense is interest revenue, interest expense, or anything that says gain or loss, because those are unusual transactions. They're not part of normal operating. So we come down here, we add up our operating expenses, we calculate income from operations, or it's also called operating income. And this is a very important subtotal, 20,278, because this is the sustainable income that goes forward. So we take the 237 minus the 74522 and get operating income. And then here we have kind of the little bits and pieces of unusual, irregular income. So interest revenue, we add gains on sale of equipment. That means we had an old piece of equipment, we sold it, and we made a little bit of money, $200 for total other revenue of 2,700. Then we have other expenses, interest expense, and casualty loss from vandalism. These are not normal parts of our business. Now, gains and losses are not normal parts of our business. They come along every few years, and we put them below operating income. Interest revenue and interest expense are usually pretty normal, but they're part of financing. And remember, we have operations, financing, and investing. So they're not part of operations. So we take the 2,700 other revenue minus the 2,000 other expenses for net other revenue of $700. And because it's revenue, we add it to get 20,978. Then we subtract our income tax expense, and it'll tell you what to use for a tax rate. In this case, we use 20%. And this bottom line is the bottom line, net income. Okay. So you need to be able to recreate this and think about that. You've got these subtotals: net sales, gross margin, total operating expenses, net operating expenses, net other revenue and expenses, income before tax, income, net income. So think in those terms, and we use the multi-step income statement going forward. You will see it on your financial statements, and you'll see it in problems. You'll see it at any company you work at, because we want these subtotals because they give us more information. Okay. And if you think back to chapter 1, where we introduced the income statement first, we just said revenue minus expenses equals net income. Now we're getting more granular. We want more details. Okay. All right. All right. So I'm trying to think, what company did you guys have? Which companies did you have? You had
I think I'm General Mills and Kellogg.
General
Kellanova.
Kellanova. Oh, General Mills and Kellogg. Yeah. Okay. Okay. And then Ashley, what were you? You were
Coke and Pepsi.
Pepsi, Coke and Pepsi. Yeah. Yeah. Those are classics. Yeah. Good ideas on General Mills in terms of diversifying. And then I think Pepsi and Coke are so interesting because they've been jumping on this healthy drinks, but we all know they're not that healthy. So, but they're trying. They are trying. So let's see. I can't think of anything else unless you guys can. And then the periodic system, we're using very specific accounts, and we want to make sure that you know that as well. So your first question on homework problems, or rather on a test question, is going to be, is it perpetual or periodic? You're going to use the perpetual system of accounting, or you're going to use the periodic system of accounting. All righty. All right, you guys, thanks for coming, and I'm glad you're taking the time, and I will see you maybe next week for the test review, unless you have a last minute question.
Thanks, Professor.
All right, thank you.
Yeah, thank you.
See you later. Bye-bye.
Bye.